The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets off the highs slightly, negative by 13 points, but all things considered, decent week in the markets, decent month to kick things off for 2023. You're talking about all the markets dramatically higher. We give it back marginally today. Intel taking it on the chin in a big way this morning. We got some inflationary data, but before we do, we'll jump around with the S&Ps. Yeah, we're negative by 13 points, folks. That was quite an acceleration in the final 15 minutes yesterday. All we've done is give up about last 15 minutes of trading in the S&Ps yesterday. You got a spike to 4,077. We're trading at 4,062. NASDAQ 100, we're negative by 60 points right now, 12,000. Jumping around my charts a bit. We got the Dow basically flat, just above 34,000 right now. We get the Russell positive by 5 points. That's about 0.3% in the green. Crude up $1.23. You see the volatility just recently on crude. There's some volatility, man, at 9 o'clock in the morning. You spike below 82 briefly. Right now, we're up $1.21 on the session in the price of crude. You jump to the gold contract. Quite a run yesterday for that gold contract. And what was that? An extension from where we were of 6 o'clock to, I'm not sure. Oh, that's jumping contracts. That's what's going on. Okay. So we got the gold contract right now trading at 1945. Let's jump to the dollar index. Dollar index at about 102 right now. We take a look at the dollar on a daily basis. I mean, yeah, we're positive by 14 ticks today, 101.98, basically sitting at 102. But lower lows and lower highs in the dollar index continuing to be the trend recently. And we jump to notes and bonds. Right now, you got the 10-year. There's a lot of Fibonacci numbers on that chart. Let me take some of these off for some clarity, man. There's one. There's two. And we'll leave that one on for right now. The 10-year, negative by 10 ticks. You're looking at 114.17 right now. The 30-year, negative by 19 ticks, trading at 129.26. We jump over to the VIX. It's been a one-way trip to positive prices. We got an 18 handle on the volatility index today. The low recently, January 13th, 1801. I mean, you go back, folks, the low last April was only 1845. So we're in new territory for the VIX with low volatility, markets marching higher. And let's jump into the inflationary numbers we get this morning. So you get the PCE for the month of December. It is the the Fed's preferred inflation gauge. And that number on a month-over-month basis, the core PCE, which is probably the most important number in there, okay, increases at 0.3%. Basically in line with estimates. When you look at the headline number for core, 4.4% from a year ago. That's down from 4.7% in November. And again, everything pretty much in line with estimates here. One of the aspects of this report is consumer spending, though. Even less than already modest estimates. Consumer spending was even less than already modest estimates. Spending adjusted for inflation declined 0.2% on the month. Market was looking for 0.1%. That came despite a 0.2% increase in income, which met estimates. So you have a 0.2% increase in income, and meanwhile, you have spending declining 0.2% on the flip side of that. And yeah, we march into a Federal Reserve meeting that begins on Tuesday. Remarkable, right? We get an announcement at 2 p.m. Eastern Time on Wednesday. I imagine they're probably going to go 25, folks. There's enough in there. They'd still be hiking, okay? They'd still be hiking. They're still in a restrictive rate policy at this point. And I'd say they probably go at least a couple meetings of that degree, depending on how the data goes. But, you know, I was listening to Bloomberg earlier this morning, and they had somebody on there, and he was talking about, rightfully so, I mean, when you're dealing with year-over-year headline numbers, and yes, okay, the Fed is looking at, most importantly, probably on a month-over-month basis, the core PCE. Our man Kevin Hincks has said it before, folks. It's a great quote. You already know 11 of the 12 months going into that number, okay? That's pretty much. You get some revisions in there, but you already know the 11 of the 12 months. All you're getting is the most recent month. You add into the other 11, there's your year over year, okay? So everything else is already baked in, but nonetheless, when you were dealing with numbers, headline inflation rose 0.1% on a monthly basis and 5% from a year ago. Headline inflation, 5%. Core inflation, 4.4%. Those are tough numbers, man, to pause your hikes on that degree. Maybe you start getting down to 3%. You know, you could pause. I don't know. We'll see where we go. But guess what? We got a meeting on Tuesday. We got an announcement on Wednesday. And the market, they pretty much like that data, man. You're trading at 4,060. All things considered, we pull it up on a daily basis. We've just traded from a price point on January 6th of what? 38.19. So you're up 240 points in that. And every 38 points is 1%. What are you talking about? Almost 6%. The S&Ps are up already to kick off the year. NASDAQ 100, you jump over the run that it's had, man. It's been quite a one-way trip from 10,750 up to 12,000. So what is that? That's talking about 1,250 points of a 10,750 point index, 12% out of the gate. Not for the year technically, but that's just from the trade that we've been in since January 6th. Quite a run higher, man. Can't overstate when you're doing double digits over the period of 3 weeks, folks, in the NASDAQ 100. And we still get some earnings next week that come out, but we've made it through some of them. Intel, not making it through just yet, man. Intel, they're going to drop. I was talking about this yesterday, and check it out. You jump over to Intel, and it was interesting that there wasn't an extreme amount of volatility put into this stock for the type of move that you could get. Now, I wasn't trading this, okay, so it wasn't to that degree. But nonetheless, you know, you're talking about a stock right now that has less than a 5% move. Now, these numbers are as of the close yesterday, which is pretty cool, folks. So everything stays put. We get to see how the market looked prior to their numbers, okay? Intel closed at $30. And the market was pricing in about $1.50. Okay, if you bought the options expiring today, you were looking at about a $1.50 move in either direction. Well, what do we got? We got almost a $3 move in either direction, man. And there's your drop off from $30 down to $26.75 at the lows. We're chopping around at $27.24. And boy, depending on which headline you want to pick, they are not good this morning. And let's start with the Bloomberg headline. One of its grimmest forecasts ever, slamming shares. You jump over to the CNBC headline. Horrible quarter revealed in inventory glut and underused factories. Yeah, some big ones in a big way in terms of some tough numbers for Intel. Weak and uncertain guidance is how they put it. They did not give full year guidance for 2023, citing economic uncertainty. Listen, that was great during COVID 3 years ago, man. That is not going to fly coming into the year 2023. The data points for the current quarter suggest tough times. Intel guided for about $11 billion in sales in the March quarter, which will be a 40% year-over-year decline. Gross margin will be 34.1%, a huge decrease from the 55.2% in the same quarter in 2021. I mean, check that out, right? You have sales going to be a 40% year-over-year decline, and you have margins dropping, what is that, man? 20% of 55, almost a 30 to 40% drop in your margin at the same time. The biggest issue is that Intel guided to a 15-cent loss per a share. A big decline for a company that a year ago was making $1.13. They're going to be losing 15 cents a share. Stay tuned, folks. We got a lot to talk about. It's Friday in the markets. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Excuse me. Welcome back, folks. We have a chart of Intel up here. So markets right now in negative territory. S&P's off about 15, just chopping around where they've been for most of the morning. You take a look at Intel, man. Yeah, if you get into Intel in the late 80s, early 90s, you're all set. But guess what, folks? I mean, you're practically going to be in a losing position. I mean, yeah, we've had some lows there in 2008. We've had some lows in 2002. Outside of getting Intel at basically market lows, you're going to be in losing position for any time over the last 25 years. Now, I'm ballparking. There's a lot of area in here, I guess, that you're going to be below there, but a pretty remarkable chart for a company like Intel, considering chips run the world. And meanwhile, I mean, this thing blows out of the water 2000, and you never got back your money if you were at the high there. Almost made it on a couple occasions in 2020 and in 2021, and just like that, man, getting back into some of those numbers. So that's your longer term chart. Shorter term, man, this is a one-way trip. Yeah, maybe you're getting your double bottom. Maybe that's the action. We'll see how it trades today. You're gonna excuse me, you're gonna open down 10% on Intel shares. So let's just go over some of those tough numbers as we got into it. Management gave several reasons for a tough upcoming quarter. One of them was that its customers simply have too many chips and need to work through inventory, so they won't be buying any new chips. Pretty simple business, okay? PC and server markets have slowed after a near 2-year boom spurred by remote work and school during the pandemic. Now PC sales have slowed and the computer maker has too many chips. They have one prediction here talking about during the year they're going to hit about 270 to 295 million PC sales. They were looking for 365 million as recently as 2021. Just huge numbers to diverge in terms of what's happening. Intel, we talked about the gross margins, 34.1% gross margins in the current quarter. They were looking for 51 to 53 as recently as last year's Investors Day. Yeah, you talk about it, man. They spent $6 billion on dividends in 2022. They did not cut the dividend on Thursday. Meanwhile, the company said it wants to cut $3 billion in costs for 2023, and they're going to spend around $20 billion in capital expenditures to build out its factories. Seems like $20 billion is not enough in terms of the numbers that get thrown around for some of those factories to build chips, right? Taiwan Semiconductor, what do they spend? $100 billion, something like that. Tough numbers for Intel, man. We'll see where they open. It may just be dropping like a rock on the open as down 10%, but boy, it doesn't get much worse in terms of those types of revisions. And if they keep going, folks, if you go from margins of 54% to 34% that quickly, guess what? You can probably go down to 10% or no percent on margins just as quickly if you're dropping like that. All right, what else do we have moving this morning? Let's check around some of the articles we talked about. Yeah, so the Adani Group, we talked about it, man. They're down $50 billion and everything just keeps hitting the max lows in terms of where you can go as people are trying to run for the doors on this one. The $50 billion sell-off in the Adani Group's empire following the U.S. short seller Hindenburg Research's scathing allegations has dragged even, their indexes to the lowest level since October 21st. That's the Nifty 50 over there. Top losers in the Indian Gauge. Yeah, fell as much as 20% on Friday, trading below the price band for its key share sale. Yeah, and I would be careful, folks. Be interesting to see how that shakes out. Richest man in Asia running shell games. Why not, right? If you can get away with it, man, people are going to make it happen. Let's jump to Salesforce in the news. We jump over to CRM, Salesforce. So they're down with the market marginally today. Quite a year last year for them as they dropped from 311 in late 2021 down to about $120. We're catching a little bit of a lift with the markets recently. You put it on a 15-minute, so they're going to have new board members, I believe, right? Yeah, they appoint ValueAx Morfitt as director in board reshuffle. They had 3 to board amid activist pressure. You know what? Sometimes, man, you got a stock that's getting pummeled like this. You believe it might have some equity value in the future. Yeah, you want some outside insights in the board in terms of not just going status quo. So they got 3 new independent directors to its board as it seeks to stave off pressure from activist investors. And there they are, Salesforce appointing new directors there. You got the MasterCard CFO, you got the former Carnival CEO, and Mason Morfitt, ValueAct Capital Management CEO and Chief Investment Officer. Yeah, Slack, $27.7 billion, man, in 2021. And boy, some of the volatility on that equity in terms of, let me go back to a 5-year. Yeah, that's 2020. I think this was the beginning of some of the volatility in terms of that sell-off when they had started announcing their acquisition of Slack back in the beginning of 2021. You run up to 311, and just like that, you get cut in half still at about 165 for CRM shares. Anytime, folks. I think in general, I've talked about on the program before, corporate governance, probably need a little more of it, man. Too often the board just kind of goes along hum-ho with things when really they're supposed to be in there protecting the shareholders at all costs, man. That's why they're there. Even the CEO works for them, right? They're the board of directors. One of the examples in there, we talked about it. There's a million examples, folks, okay? I'm sure everybody has one if you're invested in different equities. Disney's been quite a run recently. Disney, though, okay, recall, so they get rid of their CEO, and I'm even just going back. He just got a new contract in June when the stock was down at $90, folks. He got a new contract somewhere in June or July for 3 years. The board gave him that contract guaranteed for 3 years. And what happens? They fire him within 3 or 6 months. Now, as I stated at the time, my guess is that he told them something about the earnings coming up in August that gave him a little bit of a reprieve, even if you're talking about dealing with his own C-suite executives, right? Kind of calming the resistance that was coming. Yeah, well, that was short-lived. You were back down there in November, and he was out. But the point being, folks, if you were so unsure of things going forward as a board, that money was guaranteed for 3 years. He gets it for 3 years. You didn't have to do that, man. That money was taken from shareholder value. There's a million different instances. That is the tiniest instance in the world. But as a Disney shareholder, I think the board was not doing their job there, guaranteeing a 3-year contract to their CEO. Okay, why? Why do CEOs get all of that extra money Well, there's no way. You're telling me when the stock was down at 91 bucks that they couldn't have said to the CEO, you know what, we're going to hold off for right now for guaranteeing you 3 years. And yeah, of course, it's all a game of chicken. It's all a negotiation. Okay, what if he says, well, that's it, I'm leaving? And what happens? Maybe their stock goes in turmoil. That's the fear there. Okay, it's worth it to guarantee 3 years. No, it's not worth it, man. Okay, they weren't doing their job. They guaranteed it for 3 years. And then immediately afterwards, they fire the guy and he gets all of that money and he gets to walk. Not a bad deal, right? He gets all that money. He even has shares. He even has options he gets to take with him. And meanwhile, he lets Iger fix what he did to that company over that time. A small story, a little bit of personal bias there, as I am an owner. But you see that stuff all around, folks, okay? It's just a blank check in terms of a 3-year deal, no problem, guaranteed. You're the CEO, you're the man for the job, can't find anybody else. 3 years, it's yours. The board should be doing a better job there, bringing in independent directors. They're the people that would say, hey, I know this is a club, you guys have been hanging out for a while, but this guy's doing a bad job. Why? We're going to guarantee him 3 years. Why don't we, make sure he's doing the job and we're not going to fire him 3 months from now and he gets to keep all that money? Where was that voice in the room? I would guess nobody said that when they were giving him those 3 years, right? All right, we'll get off the Disney gripe. We'll get back to the markets. S&P's off 13, folks. We're coming back to the open. Should be an interesting one, digesting that inflation data. Come on back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, welcome back, folks. Excuse me. We got the S&Ps down about 12 points right now. We're back to a 5-minute chart. I imagine we're going to see some volatility in two directions, digesting that type of a number. We're already seeing it, man. 10-point range in the S&Ps, but we'll see where we go from there. Jumping around, I'm trying to find one article. There's the article I wanted to highlight, man. My friends were talking about this one. I heard them on Bloomberg talking about this one. Not something to overlook. Americans falling behind on car payments at a higher rate than 2009. Very interesting statistics in terms of how things are lining up, man. The car market, pervasive in terms of the data and how it's really impacting, whether it's inflation, car prices, etc. They walk through the numbers in here, though. You're talking about, folks, rise in auto delinquencies, the percentage of borrowers at least 60 days late on their car payments. Undeniable spike, man. So you're coming back up to where we were coming into the pandemic, okay? And you are above where we were in 2009. And you see the spike, man. We spent the better part from after the dot-com, 96, 98, right? You come into the end of 98, 1999 or so. We're at about 3% delinquencies. You rise up during 2008, 2009 at about 5%. We still slow and steadily got above that number, which is interesting. You can't deny that spike, man. We were at 2.6%. People late, 60 days. We're now at a percentage of 5.7%. Higher interest rates, one of those factors, man, making it even more difficult to make the monthly payments. The average new auto loan rate, 8.02% in December, up from 5.15 a year earlier. And guess what? That rate goes way up for subprime borrowers, okay? The total monthly bill for one of the people they're talking about here, $1,000, including the cost of insurance, thanks to a whopping 26% interest rate. 26% interest rate, including insurance. I mean, insurance is like $200 out of that right away. Affordability struggles, to say the least. The number of repossessed cars, this is talking about the Manheim, the auto auction company, has increased 11% in 2022 compared to the prior year, but still down 26% from 2019. A little bit of a divergence there, right? And I always say, folks, percentages on small numbers can be deceiving, okay? So when you read something like this, the number of repossessed cars increased 11% in 2022 compared to 2021. Well, guess what? 2021 was probably a banner year for repossessions, I bet, in terms of a low number, right? There was stimulus everywhere. Yeah, putting the number up in terms of where we are for delinquencies. 2021 was the year that we were at our low, okay? So when you see something like that, man, that doesn't tell me anything. 11% off of almost record low delinquencies, right? That means nobody was getting their car repossessed either in 2022, basically, for all intents and purposes. And we are still down about 26% for repossessions. Now, eventually things are going to catch up, man, okay? You can't be behind 60 days. You can't have 1 out of every 20 people not paying their car loans without having repossessions. It will take place, but nonetheless, there's a lot of things happening in terms of the numbers that we're talking about for interest rates pushing payments up, right? Kind of the same way in housing, man. You're paying 8% on your home loan. on your car loan, right? Remember the days of 0% financing? Remember the days of 2.99% financing? Yeah, as I say that, folks, it's so interesting. On my Bloomberg article, they must hear me. The computer's hearing me, folks. I'm kidding, okay? But one of the articles I had pulled up here looking at this morning was a Bloomberg article I have to glance over, and look what they're popping. They're pushing a 4.9% APR. What is this, Infinity? They're pushing a 4.9% APR. That's what they're advertising for up to 60 months for well-qualified buyers. They are advertising that they'll lend you money at 5%. And they should be, because that's a decent APR, because you just saw that 8% is actually the average right now for a home loan, and that's not talking about subprime. But keep your eye on that one, man, because 60-day delinquencies, eventually you're going to see things catch up. Now, let's just jump into this article, man. Just one of the risks you want to put on your radar. Putin plans new Ukraine push despite losses as he prepares for years of war. It's a bummer, man, to put it lightly. Words can't surmise that one. But you back up crude. I mean, we're going on a year, right? Basically, I think we're coming into basically a year. You back up crude. We put it back about a year. Let's find where we were. That real escalation. Yeah, that's really where things escalated. You can always find it on the crude price. So you're coming into basically the middle of February when things really started to ratchet up. You climb up to 130. Pretty remarkable. That was March 7th, man. And the last time that we were above 120 was June 9th. Time just flies. It's been a one-way trip lower for the price of crude. Yeah, you've been chopping around at between 80 and 70 for the better part of almost 2.5 to 3 months, which is remarkable when you put it that way. Crude really helping the headline numbers on some of those inflations, and I'm sure you've heard the talk. We start to get rise in energy prices. You could see those headline inflation numbers again persist, which could be a problem for the Fed. But just keep this one as one of your risks, man. You know, Russia preparing for a new offensive to regain the initiative, even as it prepares for a long standoff in Ukraine. Excuse me, not sure how that one ends, folks, but it is a risk of escalation that is out there, let alone what happens with China, Taiwan, many risks out there that maybe not be into this market. But this market, it's marching higher, man. S&P is down by 7 points right now. We're at 4,068. So interesting as we come into this break. So I was checking out some of the houses that are going on. I've been talking about. I'm near Lakeland, Florida, folks. And there's a huge development right kind of near where I live, just abates our property, the development that we are in. And it's a combination of Lennar and I think it's D.R. Horton, excuse me. And so we checked out some of the houses just out of curiosity, right? You're looking at them. They're decent houses. They're kind of cookie cutter the way you'd imagine in Florida. Okay, you got a bunch of cookie cutter models. They're all put side by side. They build out the roads. They built out the infrastructure. It used to be a cowland, which is pretty cool. Farmland. I used to walk the kids over there, right? They'd see the cows. They'd be mooing. Well, now we got 1,500 houses in a development as opposed to having cowland. Not ideal. The interesting thing, though, I was talking to my dad about this yesterday, is that the cost for some of these houses is anywhere. I think they have them maybe low 300s up to probably 460, something like that, maybe 500, something like that. And what the kicker is there, though, is they have CDD fees, okay, which is a community development district fee. So this build out, and I'll try and find some more information about this build out. I'll pull it up. Is its own district, okay? And this probably has to do with when they're building everything out. I was talking to my dad about this yesterday. But the community development district fee, okay, it's a special assessment used in the U.S. to finance the construction and maintenance of infrastructure improvements of newly developed areas. So what are they doing, folks? You got to pay about $250 a month in a CDD fee, different than an HOA fee. Okay, their HOA fee is like $25 a month. You're paying $250 for the year for their HOA. Now they have a pool in this complex. They have a pool in a 1,500 home complex. Okay, $250 a month. And what are you doing? You're basically paying, and they finance the build out of those roads, of the infrastructure, and then they just add it onto your payment for 30 years, $250. It's pretty interesting. But guess what? It's a way to bring down the headline price of that house in a tough market. We'll finish this up when we get back. We'll talk some Bed Bath & Beyond as well.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps right now, negative by about 6 points. NASDAQ 100 negative by 17. So just to finish up the conversation, I was jumping around a bit, and this is talking about on the Lennar site, the development just a bit. And you can kind of see, can I blow this up? No, it's not letting me blow this up. But you can see the number of houses here. Now, this is just the Lennar they're talking about. They have all the homes. They have the estates. They have the executives. You have D.R. Horton with their promo page as well on their website. Okay. Now, what's interesting here is that I was just looking for news as well to talk about how many. I mean, it's going to be a phase 1, phase 2, phase 3. This article just from a couple weeks ago talking about the Bartow expands Wind Meadows Development District. Here's how many more are coming. Now, interesting in here. Okay. They talk about, now they already have, what's the number they just said here in terms of the actual number of houses that were built last year in this development alone. Here we go. In the Wind Meadows subdivision, let's see. So 300 new houses were built in the city last year, and 230 building permits were issued in that subdivision. But here's the interesting part. It's declining. They had been doing 45 to 50 new building permits each month, okay? But in December, only 16. What they put out there. Now, this development's huge, folks. They can keep going. They've been selling between about 350 and 400,000. Okay. Now, what they do talk about in here as well, though, is the development district. Now, here's the part that's the kicker, and you're going to start seeing this on all of these, I imagine, because so the homes at, let's say, one of the homes we were looking at was about 370,000. Okay. So what they did is instead of rolling this in to an expense somehow, okay, they have just pushed out that expense in debt and added it on to each person's home. Now, the CDD fee is dependent on the price of the home. It's a percentage of some degree, okay? So it's not a flat fee. It's a percentage of the money that your value of the home, okay? But here's how they put it in this article. So, unlike the existing district, okay, and this is where things get like, there's no existing sewer and water for the extra expansion that they just pushed out. Unlike the original phase, they're going to get electric from Lakeland versus Bartow. A development district is a separate entity and differs from a homeowners association, which typically enforces deed restrictions only. In instances where a development district overlays the subdivision, such as it does for this development I'm telling you about, which is called Wind Meadows South, okay, or Wind Meadows in Bartow, Florida. You can look it up if you'd like. The district will maintain entranceways, retention ponds, among others, while the HOA will oversee such requests from modifications to homes, garages, or the installation of a shed, et cetera, okay? So as I mentioned, HOA, like 20 bucks a month. CDD, $250 a month, man. For, I believe it's 30 years, if not forever. And it's just a way to bring down the cost, folks. So you can have a home for $370,000 that comes with a CDD fee of $250 a month, or you probably could have had a home for what, $420,000, $430,000, $440,000, some value above that level, depending on what the interest rate is, okay? Because it's getting financed. It's literally a way to bring down the cost, to defer some of that upfront cost with a debt load of infrastructure. So be on the lookout for those. I imagine you see them a lot more because they're on the Lennar homes here. They're on the D.R. Horton homes here as well. And it's a pretty interesting sales technique, to put it lightly. Excuse me. Markets trading higher right now. S&P's minus by just 3 points. Let's see how Intel is trading on the open. Intel, yeah, no pop for Intel on those numbers, man. Down by 10%. For Intel numbers. What else do we have? American Express, some strong numbers. There you go, up 10%. They pop on the open as well for American Express with their numbers. And what else do we have up here? A couple companies. I think we had maybe Chevron with their numbers this morning, I believe. CVX, let's see. Yeah, they sure were. So they give back. They announced $75 billion share buyback Wednesday after the bell, and you give back almost all of that, man. Pretty interesting. What do we got? HCA. Yeah, with their numbers down a bit, down about 3.6%. Let's see how Microsoft is trading following their numbers earlier in the week. Pretty remarkable that you trade higher, man. Microsoft now $17 off of the lows of Wednesday morning. Remarkable. Fan favorite Tesla, or fan unfavorite. Whoops. TSLA is their symbol. Quite a surge, man. So look at you're right above the 618 now of that entire move, man. And that is of the move that you had from December 1st, folks. That's the most conservative estimate. You are now pushing a 618, the entire move lower. And that was a move lower from 200 to 100. You're trading at 165 right now. And backing this out a little bit more. I talked about this on my show yesterday. If you're looking for an area of confluence, man, you take one trend, which is the lower area from December 1st. You take the larger trend, which is the run that it made from $300. So you got a choice. You got the move from 300. You got the move from 200. Okay, the shorter term trend. You take the Fibonacci retracement zones of two different trends, where the 382 and the 618 line up, is an area of confluence. That area in Tesla, folks, is 182 to 162. We're coming into it right now. You bump up against that area, you're looking at about a 182 price tag on Tesla, and that would be a 382 bounce. Pretty remarkable that all it is a 382 bounce of the move that it was in from September, okay? It's just a remarkable move where Tesla traded from 300 to 100. So yeah, you can bounce to 182, and all it would be a 382 bounce in that equity. Be careful on Tesla, man. It is still a company. You jump over, man. You take a look at this company. It's still a company valued at $522 billion. Just for some sanity, Ford is valued at 1/10 of that price, $52 billion. GM is valued at has that reset? Are they that close? I think they are. I didn't know they'd be that close. GM, 52.04, is that right? And Ford, what's Ford? 52.2. And Tesla's 10 times both those companies. So, you think the Max Payne is over, man. That company got to levels that might have been a little bit out of whack. And we'll leave it at that. All right, let's see how some of the currencies are moving right now on the open. We got the dollar index. Yeah, holding pretty well, just under 102 for the dollar index. You take a look at the dollar index, we're just under that 618 of the entire move higher. From $95 up to about 115. You're trading down at about 102 right now on the dollar index as all the markets coming into positive territory, man. You got to love it. We just traded 4,080. You got over the highs of yesterday briefly with the S&Ps up by 1, NASDAQ up by 22. Let's jump around to some of the other companies. Amazon shares, look at that, up by 1.5%. You're back at 101 for Amazon. Google shares catches a bit up, 1.1%, man. Remarkable. Boeing had their numbers earlier in the week. A little bit of volatility in both directions. We jump over IBM with their numbers earlier. Yeah, tough one for IBM. Up about 0.3% with the market so far. MasterCard with their numbers yesterday. Yeah, but American Express delivered, man. Check it out. Up 10% for American Express. We take a look at the longer term on this equity. Yeah, highs last year of about 200. We're trading at 171. Stay tuned, folks. We're going to be coming back. We're going to be talking a little bit of Bed Bath & Beyond to wrap up the program. Don't touch this equity. Up by 8.5% today. Percentages on small numbers can be deceiving. Yeah, we'll talk a little bit of Bed Bath & Beyond, possibly going BK. Stay tuned, folks. One more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets in positive territory. You have Bed Bath & Beyond up 11.5%. Kudos to you if you bought the close yesterday and you're up double digits today. And I would sell and take those double digits and go, as my dad would say, go enjoy a beautiful lunch, dinner, stay at the Vinoy in St. Petersburg, Florida. Take them and run, man, because that money, yeah, it's probably not going to be around, folks. Now, let's get into a couple of the stories here, talking about Bed Bath & Beyond, so they're already defaulting. Default on the credit line warrants it can't pay down debts, okay? That means bad things are coming. That is the recent article that sets things off last night at 3 o'clock. But I just want to talk about real quickly, man, jumping around. So first you have, of course, Ryan Cohen. Okay, so he comes into GameStop. He is the founder of Chewy, gets out of that company for billions, comes into GameStop, ends up coming into Bed Bath & Beyond. Now, folks, you could make the case, man, all of these companies, right? Talking about the board, I was trying to find, I'm not sure if anybody knows, maybe in the den, did Bed Bath & Beyond push out a lot of shares to the public at any of those highs? Some of the equities did. AMC pushed out some good shares to the highs. GameStop pushed out some good shares, took advantage of those numbers. Bed Bath & Beyond tried to, at least, okay? There's no way they took as much advantage as they should have. This was like a lottery ticket that hit, and you had a few days or a few weeks or a few months to cash it in. Some boards did, some boards didn't. Cohen knew, and he sold his position when it got up to those lofty levels. Now, here's a September 1st, 2022 article, September of last year, okay? This is when they filed to sell up to 12 million common shares as part of a move to enhance liquidity. Now, this was last Wednesday. We take a look at the chart. We're going to go back for a 5-year daily. We're zooming in on the last 2 years. That September drop-off, I believe, folks, is them trying to say we're going to sell 12 million shares. That's their earnings as well, but I think that's when they came up with it, September 30th, because when did I just read that updated? No, September 1st, so it was prior to that, man. So let's pull it back again. All right, point being, folks, Cohen got out in August. I wish I had more time here. They go through this. He got out in August, and he got out in August at a price that they didn't get out in. Stay away from that equity. Market's positive, folks. Stay tuned. Live programming coming up. Have a great Friday, folks. Thanks for tuning in. We'll see you on Monday, folks. Have a great one.